RSP, but you need to know the difference. One, the money you put into your FHSA should be used to buy your first house. And whenever you're ready to buy that property and you take the money out, money, I'm answering your question, and you take the money out to buy that property, you don't need to put it back. Yes, that is the objective of FHSA. FHSA, you open it this year, or maybe you've opened it before, you put money inside the FHSA. By the time you are ready to buy that property, you take the money out. You fill before you take the money out, excuse me, you have to fill out this form called RC725. If you take the money out before filling that form, you are on your own. CRA is going to tax you. So RC725, you fill that, sign it. The financial institution that was used for your FHSA also has to sign before you take money out of your first home savings account. Now, the difference number one is the money you take out of your FHSA to buy that house, that is it, the account is going to be closed. But you see, RRSP, you are allowed to take money out of your RRSP to buy your first house. But the annoying part of that is you still have to put it back, because RRSP is designed for your retirement. So you are not supposed to touch that account before retirement. Remember the statement I made. RRSP is for your retirement. So you are not supposed to touch that one account before retirement. But guess what? CRA allows you to touch your RRSP before retirement under two conditions. Use it to buy your first house or use it to go to school. Even though they have allowed you to touch your RRSP, you must still put it back. This is like explanation number one, based on the question that I received. What is the difference between RRSP and FHSA? One, both of them you can use them to buy your first house, but for FHSA, the money you take out to buy your first house, you don't need to put it back. RRSP, the money you have taken out of that RRSP to buy your first house, you must put it back. Funny enough, if you don't put it back voluntarily, CRA helps you to put it back. That is difference number one. Difference number two is that the difference is another difference that I need you to know between RRSP and FHSA is the contribution rule. Okay, the year you open your FHSA, you can put in $8,000 into your FHSA. If you are someone that can put 8,000 every single year, you would have filled it up within 5 years. 8,000 every single year, within 5 years, you have reached the maximum amount of money that you can dump into FHSA. But for RRSP, the maximum amount of money you can put into your RRSP this year depends on your income last year. So if your income last year is 80,000, 18% of that amount is what you are allowed to put into your RRSP. So that's another difference. The contribution rule is different. The amount of money that you're allowed to put into FHSA or RRSP is different. I hope this helps. So another similarity is once you open the RRSP or the FHSA, the money you decide to put in such accounts should be invested. It should be invested. Okay. TJ, I see your request to join. Which part of the world are you streaming from? Manny, are you there? I hope I answered your question. Hello, Madam BC. How are you? BTRO2, thank you. Okay, amazing. So if you want to set up your RRSP or your FHSA, feel free to reach out to me, or you want to set up your investment, you have questions, you can send me a DM or use the link in my bio. Now, we all have asked this question before in the past. Maybe you ask your friend, "Oh, where did you get this T-shirt? I want to go there." Or you call your friend, "Where is the best place to buy a suit? Where is the best place to buy a good T-shirt?" We have done that at some point. Now the question is, your RRSP and your TFSA or FHSA, RESP for your children. I have a question for you. Where is the best place to set up those accounts? Which company can give you good return? Which company can give you good return? Why? Because you need to know. There is no harm in asking question. Ask and you shall be given. So when it comes to investing your or opening your TFSA, FHSA, RESP, RRSP, which financial institution is the best? Which financial institution can support your money to grow at 10%, 15%, 20%? You need to know, right? And guess what? There's only one person that can help you to confirm or that can help you to check financial institution across board. It is someone that is an independent advisor that can guide you. Why? Because when you go to a particular financial institution, they will only advise you based on what they have. They can't help you to compare from one company to another one. So that is very important. So if you're someone you have opened your RRSP, TFSA, fantastic. You have done step one. Step two, which is the most important step, is where is that money invested? Because if you invest at 1%, your money is sleeping. You invest at 5%, your money is still sleeping. But if you invest at 8%, 15%, then your money is now invested. Now, like I said, the most expensive thing we pay in Canada is taxes. We pay taxes every single day. We pay taxes in the morning, taxes in the afternoon, taxes in the evening. When we sleep, we pay taxes. Electricity, you pay taxes. Wi-Fi, you pay taxes. Right? Every 2 weeks, you receive your paycheck, you pay taxes. The little amount you receive when you go to Walmart, you pay taxes. Costco, you pay taxes. We all pay taxes every blessed day. So do yourself a favor, at least have two or three types of investment that is tax free, legally tax free. TFSA is number one on the list. So permit me to encourage you. If you have savings account and you don't have TFSA, you are not doing yourself any good at all. The interest that you earn in a savings account is taxable, but the interest inside a tax-free savings account is tax-free. So you are the one to decide what you want for yourself. Do you want your investment, the interest in your investment, do you want it to be taxable or you want it to be tax-free? At the end of the day, it is your money. I can only advise you. I can't hold your hands. You are the one to decide how you want that money to be invested. Okay. Hello. Cakes in Ottawa, how are you doing? Shanta FD1584. How are you doing? So, any question, please put it in the chat. I'll go off in the next 15 minutes. So I've talked about tax deductible accounts. We have two tax deductible accounts. It means if you put money in those accounts this year, 20 this particular year, next year, by God's grace, you're able to declare it and it can help you to get tax refund. So the question is, what are you doing right now that can help you to get tax refund next year? So don't say we did not tell you, right? You are looking to buy a first house. You are looking to buy your first house, whether you want to buy an apartment, whether you want to buy a condo, whether you want to buy a standalone house. Where are you putting that money? The money you want to use to buy your first house in Canada should be in FHSA, right? The reason is the money inside your FHSA helps you to get tax refund in the following year. But if you actually keep that money in your savings account or in your checking account, it doesn't help you to get tax refund. Even if you have $1 billion inside a checking account, you can't declare it when you are filing taxes. It doesn't help you to get tax refund. So that's one of the major benefits of FHSA and why I am teaching this now, so that you're supposed to do what you're supposed to do now, so that you can claim or you're able to get tax refund next year. Okay, so that is FHSA, First Home Savings Account. Amazing. So in case you don't have money to put into your FHSA and you know you want to buy a house in a couple of years, open FHSA with $0. Why? That means you are going to secure the contribution room for this year. You're able to secure the contribution room for this year. But if you don't open the FHSA this year, you don't have 2026 contribution, it is gone and gone forever. So let me make it make sense. Let's say this year you open your first home savings account with $0. Next year, the total amount of money that CRA is going to allow you to put into the FHSA is 16,000. Why? Because you opened your FHSA 2026. Okay. Now 2027, let's assume you're able to put in 16,000 into your FHSA. 2028, you might be able to get tax refund of 8,000, 10,000. Alright, because you were able to make use of that account. So if you're someone, you open your FHSA this year, you put in between 25, $50, $100, 5,000, the maximum is 8,000. You put it this year, 2026. Next year, when you're filing taxes, you're able to declare it when you're filing taxes. It is also going to help you to get money back. Any question for me, please? Any question, any question, any question? Hello, Shanta. What? Fitson, FD1584. Thank you for joining. Sarah, Hattie, BR, Money, Queenie, BC. Thank you for joining. Thank you for joining. Okay, amazing. Sarah, which part of the world are you streaming from? You sent me a request. The only way I can accept your request is for you to answer me. One, which part of the world are you streaming from? Two, what question do you have for me, please? Amazing. Okay. Sorry I have to stress you, but that question is important. Any other question, please? Okay. Sarah, do you still want to come up? Do you still want to come up? Oh. Well, for the world simple of how to do it.
Hi.
Hello.
Hi. Thank you so much. Sorry, I was doing something with one hand, so I was typing with the other hand, so that's why I could not type very fast.
No problem.
Yeah, so I just wanted to ask, what is the maximum amount? Because you just gave, like, if I'm to open like zero account and next year, is there a maximum account we will have to put every year? And then, for instance, if there's a maximum amount, like let's say 20,000,
Mhm.
um, the upper year coming, are we going to be topping? Like, is it something that they have to be topping, or since it's 20,000 this year, you have to do away with it and upper year again? Is this something? I just want to know what's the maximum amount and can every year can it be putting like
Okay, which account are you talking about now, please?
yeah the housing
Okay. Okay, thank you for asking. So this is how it works. FHSA is designed like this. The first year you open it, it is 8,000. Now, we are allowed to put in 8,000 every year for 5 years. That means 40,000 is the total amount of money that can enter into that account from your pocket. But you can't put the 40,000 at once. It is 8,000 maximum in 1 year. So maybe somebody is like 22, 23, and they are not ready to buy a house, but they are just investing towards that purchase. Or maybe the person is 35, they are still not ready, but they want to start investing. It is good that they use all those 5 years. But somebody is ready to buy a house in 2, 3 years because that is their objective. They can still buy it in 2, 3 years, But the total money they are able to put is 8,000 every year. That's it. So to answer your question, there are so many ways to answer that question. See, let's say you open FHSA this year. The amount of money you can put in is between $25 and 8,000. 2,500, 1,000, 5,000, whatever you can afford. But in total, the maximum is 8,000 for the first year. I hope this is this is um, I hope
Yeah,
this
yeah.
is clear.
Um, yeah.
The maximum is 8,000. So now another example is, let's say this year you only put in 1,000. Fine. Next year when you're filing taxes, you tell the person that files your taxes that you put in 1,000, and that can even help you to get tax refund. You put in 5,000 this year, 2026, 2027, the same thing. Tell the person that helps you to file taxes. They will even ask for your FHSA statement or T4. That is going to be used to when you're filing taxes. That can help you to get tax refund. Now, because the maximum is 8,000, let's say you just put in like 5,000 this year. So there's a space of 3,000. You can carry it forward to the next year.
Okay.
Yes, you can carry it forward to the next year. And then whenever you are now ready to buy that property, you can take the money out, fill out the form called RC725. Make sure it is signed. The financial institution you use should also sign it before you're able to take that money out. Now, another very important factor is the money you put into your FHSA, that money is not sleeping there. The money can also be invested. S&P 500, you can use it to buy shares, you can use it to invest in ETF or index funds. I
Mm.
hope I answered your question.
Yes, yes. Thank you so much.
You are welcome. So, any other question, please? Andre, which part of the world are you streaming from, please? Clean wise, I see your question. Okay. I'm going to answer your question. There's a reason why I paused. I'm going to answer your question. I did not ignore that question. When is it advisable to take out money from your TFSA? See, that account is an account. You can touch that account as you need. If it is emergency, you need your money, you can always take money out of your TFSA. There is no restriction. But because people have, so TFSA has so many advantage. The money you put there is invested tax free. You take it out tax free, except you maximize it. When you take it out this year, you cannot put it back because your TFSA is maxed out. It has so many benefits. Your investment grows tax free, your return is tax free, your dividend to you is tax free. But one major challenge, one major problem that TFSA has is you have money. If you have access to that money, you keep on spending it. You invest today, tomorrow you take it out. You invest today, next tomorrow you take it out. So the money is not even invested. So that is one challenge. I've seen I've seen a particular lady that came into Canada 30 years old. She's now currently in her 50s. Every time it's the same habit. She puts in money into the TFSA. She has access to it. She takes it out. She spends it. Village people call. She take the money out, spend it. So the money is not even invested at all. So if you are somebody like that, you cannot discipline yourself not to spend it, especially on unnecessary things, then you want to put your investment under a padlock where you don't even have access to, let the money be invested for you. Okay. So please go ahead. I'm going to answer your question now, clean wise, and let me know if you have questions. Please put it in the chat, and I'm going ahead to answer your question.